Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, April the 4th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not really a whole lot of economic data today. Across the pond, we did get construction PMI, came right in line with expectations at 52.2. Then here in the United States, we had the factory orders come in at 1%, was expected to be 1%. Like I said, not really a whole lot to talk about there. We did have Draghi speaking, who is the ECB president. We also have Fed member Trillo speaking today here in the United States, who is an FOMC member. Now, tomorrow we're kind of gearing up for a lot of economic data in the form of the services PMIs. We got crude oil inventories and our ISM non-manufacturing PMI. So that's going to be pretty good and robust data to give us a heads up as to what the overall economic outlook is going to be like. So everybody kind of gearing up for that. We're really kind of an inside day for the most part in equities. We got crude oil here, who is what is just unrelenting to the upside right now in my eyes, pushing well above the that 23 fib level after settling below it yesterday, kind of opening up and pushing to the lower end of that. It was looking pretty much like it was going to go down there and at least test the 38 retracement, and which was my and then I should say to what my target was, which was very close to that 50 Fibonacci level that we see right here. I thought it was definitely going to come down and blast through that, come to here, but it's not looking like that's going to happen anytime really soon. We'll have to see how much of resistance we get here at this 52.50 area, let's call it. That's looking like it could be a target now that we're above that fib level. It's all going to be dependent on pretty much those inventories that we're going to see tomorrow. Hopefully, in my eyes, we're going to see a bit more of a build because I am bearish in oil, and that would hopefully help me out there. We got gold here pushing up. This is acting as the resistance here in gold right here at the 1264-ish area. Came up and tested that, but as the overall equities started pushing higher after the open, we started seeing some weakness coming on in gold. Gold just up shy of $50 right now. The bonds obviously are going to be giving up a little bit of upside as the overall equities start to rally. We've got the bonds pushing up against this value area high for the volume is what that is there, and it's the value area low for the time, if you will. So it's kind of a really funky looking market profile actually, but that acted as resistance, kind of giving up a bit of downside today in the bonds, as we can see with the equities trying to push a little bit higher. This 9-day moving average is continuing to act as a ceiling or a resistance level, if you will, up just about 3 points on the day for the Dow. Like I said, just a big inside day. Good for traders or scalpers, should say intraday traders. NASDAQ, again, just slightly a negative, or actually down about 10 points, but just really not down a whole lot for all intents and purposes. E-mini S&Ps down only about 5 points as well. This is what I'm talking about with the inside day. We've got yesterday's value area high and value area low, just kind of bouncing inside of that area. Just really probably a lot of people kind of shoring up positions ahead of those economic data points tomorrow. The trade that I did today was in CSCO. CSCO finally covered this gap here, so I'm looking at it a little bit more bullish. I think CSCO and a lot of the tech companies, Adobe and NVIDIA and those type of computer software and hardware companies are going to do rather well. I think a lot of people are kind of pulling away from the whole tablet, starting to re-ante up with some of these PCs. I know a lot of kids are really getting into these online games and they need more robust systems. So I think that that's really where this sector is headed. When I have a 10-year-old kid wanting a PC, that's pretty good indication that these kids are really starting to want it. My older son, my 13-year-old son, is starting to look at PCs. So it seems to me that if his friends are getting that, he's wanting it to play those games alongside them, because that's what the overall market trend seems to be anyway. So in CSCO, I went into the May and bought the 32 calls and sold the 35 calls to create a long call spread. Just not a whole lot of high volatility, really. So I just put on these call spreads in order to take advantage of some expansion and volatility going forward. This being in the May, it does encompass the next earnings cycle, so I can get the expansion and volatility during that. And I paid $1.50 for that. So 50% the width of those strikes, right in line with my rules. And if I get a little bit of pop, goes up and tests those historical highs for CSCO, not really historical, but 52-week high for CSCO, then that trade will work out quite nicely. Speaking of earnings, we're doing a 4-part series on earnings. So all of you guys out there have been clamoring for this. Timing's kind of set up just right. We're heading into the earnings season, so I'm going to be teaching you guys how to set up high probability trades for that earnings cycle so we can take advantage of some volatility crushes, which is what I love to do the most. Selling option strategies and earnings are the perfect scenario for that. We know every time that earnings come in that we're going to have high implied volatility, at least for that underlying. After that binary event, we'll get that volatility crush, and I'll show you how to be able to even be directionally wrong with these different strategies and still be able to make money. All right, so go to protraderstrategies.com, sign up for that. If you can't take that, take it easy.